Hello, everybody. So Sailor bought more Bitcoin. I want to talk about that briefly. And I wanted to talk about STRD and whether STRD is undervalued. What's the potential for, say, a fire investor? So let's go. Let's begin with .day. Of course, it's .day. He bought more Bitcoin. The big question, of course, for .day is, did he use the ATM on the common or not? That's the big question for me, because MicroStrategy rebounded this week. It was up nearly 5% while Bitcoin was flat. And so if you used the common ATM and the stock bounced back still this hard, for me, that's going to be super bullish. And that's going to be a very, very good sign that the MNAV has bottomed and is bouncing back. Now, if he actually did not use the common ATM, then that would probably mean that the preferred strategy, the strategy of pushing the preferred and stopping the ATM, is actually working. And that would mean that this new era of the preferred has begun. So the big question for me tomorrow is, did he use the common ATM or did he not? And I kind of hope he did, because if he did and we still bounced back, that would be just so much better and so amazing. Point number 2 I want to talk about is STRD. STRD has been, trending a little bit on social because people are getting attracted to that yield. It's important to note that when STRD was launched, it was not yielding this much. The stock dropped, right? It IPO'd at 85. It went as high as 95. And now we're at 78.90. So the stock dropped more than 17% in 2 months and a half. Yeah, 2 months and a half. It dropped more than 17%. And now you're in a situation where STRD has an insane yield of 12.7%, which, that alone is enough to beat the NASDAQ, to beat the S&P 500. I'll get to that in a second. STRD, of course, is the junior credit instrument. It's the junior preferred share of MSTR, and it pays the highest yield. But it is also supposed to be the riskiest because, supposedly Sailor can skip a payment. But we'll see in a second whether he really can do that or not. Because if he actually skips a payment, what do you think would happen to the value of the other preferred? What do you think would happen to the value of the common MSTR shares? The market would likely panic. TradFi, traditional Wall Street, views dividend cuts as a sell signal. And so I'm not so sure Sailor and the board can just decide to not pay the dividend on STRD just like that. The company would really have to be in distress for the dividend on STRD to be skipped. And so I look at STRD, it's riskier in the capital structure, but it's mostly here to act as a fuse that is never meant to be popped, right? It's a fuse that is never meant to be used. That's kind of the way I look at STRD, and I think a lot of people are starting to look at it like this. Now, as you know, I am not an income investor. I am not a yield investor. But I am well aware that yield alone, if you buy the stock at, 78, 79 bucks, that yield alone is enough to beat the NASDAQ and the S&P over the long run, right? Over even a shorter run, the NASDAQ over a shorter run, if you take a 15-year period, the return has been about 15% of the NASDAQ. You're getting pretty close if you take into account the potential appreciation of STRD. I'll get to that in a second. The first dividend, has not been paid on STRD yet. So there is also a possibility, and on September 30th, that first dividend will be paid. There is also a possibility that as there is a history of payments, as STRD pays more and more dividends, and we build that history, kind of like a dividend aristocrat, right? Where we build, let's say we are in a scenario where 5 years from now, they've never skipped a quarterly payment, and it's 2030 now, and they've never skipped it. I see this scenario where STRD actually would be much more expensive because the market would start to price in the fact that he has never skipped a payment, and so it would look, positively upon the STRD preferred. I also want to react to this. This is a point that Sailor used to make in a few podcasts before launching the preferred. I caught on that point he was making. the fact that, yeah, you could make nearly $100,000 a year tax-free as a married couple thanks to these preferred, because, and we don't know that yet, because they have, is it Form 877 something? They have to publish a form at the end of a year that qualifies the payments under different category, regular dividend, qualified dividend, or return of capital. I'm pretty sure that they're going to be classified as qualified dividend, at least most of it. And if some of it is qualified as return of capital, well, then it doesn't really matter, because return of capital reduces your cost basis. Sure, if you have more return, if it's been 10 years, sure, you start to have to pay taxes on return of capital. But if it's under 10 years of holding the stock, you just reduce your cost basis. So you're not taxed either. So I'm pretty sure, we'll see, but I'm pretty sure, no financial advice, but I'm pretty sure the dividends are going to be either qualified or return of capital. And most people don't realize, of course, that qualified dividend actually could be taxed at zero, because most people are above this income threshold. But in the FIRE movement, Fire Independence Retire Early, people are pretty savvy, and you could optimize your income to be below those thresholds in order to not pay tax, and that would be a big delta between paying tax and not paying tax. So with these preferreds, you could design a quote unquote retired life for, say, a married couple, with 96,700 of income, making sure you stay below that threshold. And so that means that you could achieve that income by only saving $761,000. So, sure, a nice chunk of change, but way less than what the traditional FIRE demands of its, proponents, right? Way less than the 4% rule. This is way less than that. And so these instruments, in my view, are attractive to people who want to retire early, not necessarily as attractive to people who want to become rich. I think if you want to become rich, MSTR, the common, is the way to go. I like the common much better. But some people invest for other purposes, like retiring early. And in that case, that instrument is very compelling, in my view. Furthermore, STRD, as all of the preferred, they are margin eligible. So right now, the margin requirement is 75%, but over time, give them a year. After these are listed for a year, they should see their margin requirement drop to 25%. So again, looking long term. And if you have STRD, you could implement that and make sure you don't beat $97,000 a year. Make sure you stay below that threshold. And with inflation, remember, these thresholds are going to increase. So you could do that, and then you could have a buy, borrow, die strategy for the rest, right? And you could do it, say, 10%, less than 10%. You can have that buy, borrow, die strategy, which is what I think many people, including myself, are planning on doing on MSTR stock. That's why I don't ever want to sell MSTR stock. And people, of course, are catching on and doing that on Bitcoin as well. And I think this will catch on. This will become more and more common. So the purpose of STRD is very interesting. It's a very interesting instrument. There's a few more things to consider, namely two more things to consider. It's what do you think is going to happen to the price of STRD when interest rates drop? And there's two things, right? There's the interest rates, and then there's the acceptance of Wall Street and the credit ratings, right? So if these were to ever get a credit rating, and we're talking, 2030, and if in 2030 the rates are zero, which, I think they will be zero in 2030, then what do you think the price of that instrument is going to be? Right, like right now, of course, we have a spread with, say, government bonds. Government debt paying 4-ish%. This one pays 12-ish%. But even if you assume the risks are the same, and you go back to a world where government debt pays zero something, then it would make sense that this stock would be at 8 something. And so the only way to get to 8 something from 12 something is for the stock to go up a little bit, like right 30 to 40%. That's how you get it. That's why when rates drop, these fixed payment instruments go up in value. The price, the ticker price, right? The sticker price for buying these preferred will go up in value as the rates across the market inevitably go down. And so I think this is part of a big thesis of owning these. And the last point, and I've made this point a second ago, but This is really is. It's a trust on Saylor, and it's a bet on trust on the board, trust in Saylor, and trust in Bitcoin. Trust in Bitcoin, trust in the board, trust in Saylor. If you have that big trust in Saylor and the board, you would be doubtful that the dividend would be cut, because Saylor knows, and I think a lot of investors know, that if STRD dividend were to actually be cut, that would probably be a catastrophe for all the preferreds and for all of the common. I cannot imagine the headlines if STRD were to skip a payment. The headlines would be dire. We'd be like, oh, MSTR is collapsing. So I think there is a very, very strong incentive for Saylor to not cut the dividend on any of the preferreds, absolutely any of the preferreds. And of course, Strife, you can't cut it, but you can skip a payment on a strike. You can skip and make it cumulative, right? But that would be a very, very bad thing too. I think Saylor has all of the incentives aligned to keep paying the dividends, even on the most junior of them all, which is STRD. And so that's why I see this trending on X, and I think a lot of people are taking that bet. I am not a dividend investor. I am all about the common, just the common. I dabble a little bit in Strike, because Strike has a lot of common exposure, so I like Strike the best as the preferred. But I see how this could be very compelling to a FIRE investor or a FIRE movement type of person, and a person who's really looking to retire more than anything, and is not looking to like amass vast amount of wealth, but just looking to retire. This is quite interesting to that profile. So anyways, hopefully you found this interesting. This was not investment advice, not financial advice ever on this channel. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.